SEBI, that is the Securities Exchange Board of India, has recently released a consultation paper. Consultation paper wherein it will be advising the certain businesses. Consultation paper for what? For the BRSR. BRSR, that is Business Responsibility and Sustainability Reporting. Business Responsibility and Sustainability Reporting. Now, what is this context? See, whenever you talk about any business, with respect to that business, of course, you have the corporate responsibility, right? You have the corporate guidelines, the corporate codes, right? Guidelines and roles, responsibilities, etc., etc. Now it is with respect to the corporate world, the meetings, the business, how it should be, the trading, the shares, all the economy related or finance related thing. Finance and the working of the business, it is related to that. Now in addition to this, a new concept has come up, that is business responsibility. Responsibility is the key word here, and sustainability reporting. Sustainability is another keyword here. So this is in addition to the core finance and business management thing. So because you cannot just keep on making profit and not be sustainable, it is not good for the business, it is not good for the society. Also, as a business, you have certain responsibilities which needs to be there, right? You cannot let's say overlook that. Why? And also, you know, business persons at times may say ki, I am just worried about making profit, why I have to be responsible, why I have to be sustainable. Chalo, they might also want to be for a long run, but why I have to be responsible? I will do what I want, but that's not the case. Why? Because even the business, we need to understand, is successful because of the presence of the society. Since the business itself is successful because of the presence of society, right? Society precedes it and business may go, society will still be there. And society is a very big reason. People say, I am a self-made person, I am a self-made person. No, the society was still there. If you are doing profit, or, you know, I did this, I sold this, but why? Why were you able to? Because the society is still there. So society still plays a part. That is why you have to be responsible. That is why you have to be responsible. And it is in your own best interest of the business itself to be responsible. Anyways, so about the BRSR framework. Now the BRSR framework is the framework for business responsibility and sustainable reporting. It was proposed by, important to remember for your prelims, it was proposed by SK Mohanty Committee for what? To facilitate ease of doing business. It facilitates the ease of doing business. Now, what are the requirement of this framework? It requires top 1000 listed companies. Top 1000 listed companies, meaning probably the topmost, not probably, but actually top 1000 as in the top 1000 hierarchically. Top 1000 companies to report their ESG, environmental, social and governance performance. Remember the word report. They just have to report. This is just the beginning. When you want to start certain good practices of asking someone to do something additionally, you cannot outrightly put in rules, regulations, targets and make it stringent for them. Initially, you just ask them to, boss, whatever is happening, just report it. Right? Whatever a carbon footprint is there, just report it, how much carbon footprint you are generating. Then the company would facilitate it more and start doing it. Once they do it, you get the data of what the carbon footprint, this, that, all those data is. And then based on that, you can see who is doing how and what. And then later on, certain mandatory things can be included. That is how you proceed in implementing anything. So it was about reporting of ESG, environmental, social and governance performance in a standardized format. Of course, in a standardized format. Why a standardized format? Because when 1000 companies will be reporting, if it's not standardized, it will be a Herculean task to compare it. So you give them what all you need, and in that standardized format, they would be giving you the data based on the principles of what? NGRBC, that is National Guidelines on Responsible Business Conduct. Okay. So now consultation paper is there, this thing is already in place. This consultation paper tries to make certain or advise certain changes. Let us see what those key changes proposed are. It redefines value chain partners. Now these generally proposed changes are generally making it easier for the company to adhere to these guidelines. Let us see how. First is it is redefined the value chain partners. Now earlier the definition of value chain partner was such that a lot of value chain partners would be there, right? A person with small equity share, small holding would also be a value chain partner. When these many value chain partners are there, certain guidelines which are required to be followed, then it has to be followed by all of these. Now that has been made a bit easier, so value chain partner numbers would now reduce and only these people would be required to follow the guidelines. So the proposed definition will cover only significant partners who have significant amount of shares will only be considered as value chain partners. Hence this will reduce the compliance burden. Others will go out of the ambit of the value chain, so they don't have to give the compliance, right? So it makes it easier. Further, it provides more time to implement. In the current framework, BSR was mandatory from 2022-23, that means 2 years back already. But this modification gives it the first year of reporting to be 2024-25. So it is giving more time for the companies to adhere to the, not the requirement, but to report the data basically. Okay. Then it integrates credit program, green credit program. What are green credit program? There can be various kinds of green credit program, wherein the concept is, see, the overall carbon should be reduced. When you want the overall carbon to be reduced, right, big companies can do that because they have the technology, so they may use that technology to reduce the carbon. So if I was emitting, my company was emitting 1000 kgs of carbon, for example, every hour, for example, I use the technology and make it 500. Now I cannot go beyond this. And also I want to increase the production now. So even with lesser per hour, lesser amount of carbon, well, let's say one machinery is emitting this much of carbon per hour. So now I want to expand the production, so I want another machinery. So another 500 kg would be emitted. Now this will exceed. This will again make it 1000 only, which I was earlier emitting. Now what to do? So what I can do is, there are provisions where I can provide my technology for someone else to use in their own business and help them to reduce their carbon footprint. Let's say I help two companies to reduce carbon footprint from 500 to 250 for both of them. So I have saved 250 carbon footprint for both of them. So an equivalent of 500 kgs of carbon footprint I have saved. Now this carbon footprint which I have saved now gets credited to my account, and now I can release 500 kgs more of carbon because I have reduced it somewhere else. Since I have reduced 500 kgs of carbon somewhere else, these 500 kg of carbon is now in my credit. And I can emit this additional because I've already helped someone else reduce it. That is one of the way how the green credit system works, carbon credit system works. There can be various ways of doing it as well. Now, green credits, these are the green credits generated. So, green credits generated by company and its VC partners shall be additional shall be an additional leadership indicator under BRSR. What does it mean? It means that the more credit, more green credit you are generating, it will give you more leadership credibility under BRSR. Now it also aligns with 2024 MOEFCC notification, Ministry of Environment, Forest and Climate Change, which allows carbon credit from tree planting to be reported as an ESG leadership indicator. So MOEFCC also said the carbon credit, specific kind of carbon credit. What is that carbon credit? Carbon credit from tree plantation. You can have carbon credit from tree plantation also. Let's say one tree if you have planted and it reduces, let's say, 10 kg of carbon dioxide per hour. So like this, if you plant 50, so again you are eliminating 500 kg of carbon. So this is another way of gaining carbon credit. Basically, you have to reduce the carbon in the environment somewhere in order to gain the credit, right? So if you're talking about India, it will be of course India, but that's how it is. Somewhere you reduce it, you gain the carbon credit. Now, flexibility is also provided. What is the flexibility they are talking about? They have the option to choose assessment instead of assurance for BRSR. Assessment instead of assurance, they can choose. Here it's a very nice thing which they are letting the company choose. What is the difference between assessment and assurance? Assurance can be, I will give you the assurance, I will give you all the evidences needed, you can keep asking, I'll keep providing. That is the part of assurance. But the companies can go for assessment also. Ki boss, don't worry, you come, you check our records, you yourself assess and check how much it is. Now, the question is, why will the company go for assessment? Because in assessment, people are coming and checking it. Rather, you only give the evidence. The thing is, actually, many companies may go for assessment. Why? Because when you are doing assessment, right now, there is no penalty. Right now, there are no targets. They are just assessing you how much you are doing, what you are doing. So, when first only you are getting it assessed, you are preparing yourself for the future. Because in this thing, definitely in the coming future, there would be certain targets. So why not get it assessed and see what problems are coming, so that when there are targets, and then when there are objectives, and if you fail to achieve the objectives, when there will be penalties, you are better prepared for it. Okay. So SEBI into 2023, SEBI introduced BRSR core for assurance and ESG disclosures. And now you can go for assessment as well. Assurance follows global domestic standards that go beyond the data verification, adding extra costs. So adding extra costs because there's a lot of time involved. When you're assuring with respect to certain thing, you send certain thing as an evidence, it is either accepted, rejected, you are asked for more, so all these things are happening. So it is an extra cost for the company. In assessment, what happens? Third party is coming, assessing you, end of story, right? Now, we saw national guidelines on responsible business conduct. So these are certain principles which needs to be adhered to in order to ensure that your conduct of business is responsible. First is ethical, transparent and accountable conduct of business. Your business should be ethical, it needs to be transparent. Right? Your records needs to be in the public domain. You should not be hiding things. Sustainable and safe provision of goods and services, sustainability and safe provision, well-being of employees, interest of stakeholders, promote human rights, protect and restore the environment. Okay, so all these things you have to keep in account while you are doing business. Responsible and transparent engagement in influencing public and regulatory policy. Because see, a lot of businesses can come together, form a pressure group and pressurize the government for certain laws. So whatever you are trying to influence, that needs to be a responsible influence, right? Promote inclusive growth and provide value to the customer. So it is not just taking into account the customers, but their employees, but as well as the society at large as well. Okay. So this is a bit about the new consultation paper which SEBI has released for BRSR. Thank you.